What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Friday, May 31st. Alright guys, Nvidia finishing the day here today, Thursday, down $43.25 per share. That's minus 3.77% in regular trading hours. Down about 5 or 6 points here in the after hours as of right now. Wherever that ends up, take it with a grain of salt. Volume is very low in the after hours here. Now listen, quick heads up. Nvidia is of course a big blue chip. So tomorrow morning, 1 hour sharp before the market opens. That's 8:30 a.m. Eastern time. We get PCE inflation data. That is the inflation read that the Fed is most worried about. When the Fed says they want 2% inflation, guess what? They're talking about core PCE. So pay attention for that. Set your alarms. That is likely to move not only the market, but likely Nvidia itself. Also worth noting, at the exact same time, we get the U.S. consumer spending month-over-month read. So I'm going to be on the lookout for both of those. PCE is really 4 numbers, year-over-year and month-over-month for both regular and core. So listen, let's take a look. Let's pull out all the bias we possibly can from Nvidia here today to get the best look possible on the stock heading into tomorrow. We'll look at the volume profile, the psychological levels, a lot of trading decisions going to be made around those here tomorrow, implied volatility, the expected move, and finally the directional bias coming out of the chain here today for tomorrow. Let's start with a quick directional bias volume profile analysis here on the 5-minute chart. And hey, by the way, if you're new here, guys, first of all, welcome. We have new people joining us every single day. I appreciate that, and I hope to see you subscribe to the channel. Please do. My goal here is 10,000. We're getting very, very close, and I will keep the Nvidia videos coming daily in return. Now, let's take a quick look under the hood and see if we can pull out any bias here from today's trading. Very contextual open. Worth noting, we're seeing maybe about 5-10% bullish bias off that open because it hung on a little bit deeper into the day than what is typically considered normal. Over here, we're seeing, I would say, an equal amount, maybe 5 or 10% of bearish bias on really these two pops that are very out of context as we come into the bottom of that downside move there, right, before the little bit of a bounce. Well, you know, we can toss that one in there. This single bar on its own would not be nearly enough. The only reason I'm including that is because we're also seeing these two over here, a couple consecutive out of context red bars equals small amount of bias. And then as we move through the day here, we return to very contextual volume for the majority of the day, heading into the close. This here, guys, with the exception of this bar here. Okay, first of all, this bar is going to be a rebalancing bar. It's going to be high volume, but it's usually very little movement, and it's typically that first bar after the closing bell. This here, if we didn't have these two green bars, if these were red bars, I would be calling that, because we started the increase in volume that's normal for the close slightly early. Again, if these were red bars, I'd be calling that probably 25% bearish volume. Since it's being, bearish bias. Since it's being broken up by a couple of green bars, and we're really not all that crazy out of context initially, again, it would have been only about 25%. I'm going to call that maybe about 10%, maybe even 5% bearish bias heading into the close. It's not crazy out of context, and it's broken up. It's choppy. That's all we're getting here today, realistically, guys. Now listen, bulls, we're talking about nearly a 4% red day, so on a day where many people would expect to see relatively heavy bearish bias, to get that underwhelming amount is not a loss. At least I wouldn't write that down in the loss category. Whereas, you know, bears, we know what happened. You guys won the day. It's down almost 4%. But if we dig deeper, a little bit disappointing from a volume profile analysis perspective if you are bearish, because it's not really tremendously bearish bias here in the volume profile. But let's move on. Let's take a look at the psychological self-fulfilling prophecy levels. Again, guys, a lot of decision making going on around these levels, and we will start here with the 30-minute chart. Here we have the gray line, that's the 200 period, and the white line is the 50 period. Now, we have been looking beautiful on the 30-minute chart the last couple of days. Today, we tried to pop off the 50 period off the open, the 50 period flattening out, tried to pop off it to drag it back upside, failed, dipped down on actually pretty decent volume. Volume increased a little bit there. We tried to retest it, break back through, rejected hard into the close. Listen, guys, as far as the 30-minute is concerned, bears, you guys took the day today. Okay, you reverse this a little bit in terms of how the 30-minute in particular has been looking. So, good for you bears. But bulls, here's what we're looking for tomorrow. Any downside test of this 200 period. And by the way, yes, we're going to talk about 1100. We will do that on the daily. That's the best place to discuss it. Right now, we're just talking about the 30-minute in particular, and then we piece it all together piece by piece when we get to like kind of the daily, right? But here on the 30-minute, any downside test of that 200 period, bulls, we're not going to want to give that up. Ideally, we want to see that hold. That's about a 3% move away, though. So bears, that's going to take a little bit. Okay, a repeat of today, essentially, to get down through the 200 period. Bulls, any downside test, just want to see that hold as support. Whereas really the goal tomorrow, bulls, if we could get back above the 50 period, it would be beautiful. But understand, to really get that done would take at least probably a 3.5% move. Now, if we take a look at the 4-hour here, you guys can see, the 4-hour was kind of out of context in recent days. That's starting to slim down a little bit, but it's still, a 7.1% downside move away. Bulls, we're still seeing the 50 period move higher. That's not bad. It's beginning to flatten out a little bit. Okay, bulls, I just don't want to see this flatten out to completely flat because it takes time to start ascending again. If we could get some kind of upward movement, any upward movement at all, on high volume here tomorrow, just to start to return that 50 period on the 4-hour back to its aggressive ascending position. The reason I care is because I want to get some additional psychological feet up underneath the move, as many potential backstops as possible, right? We want that. That'd be great. That's really all I'm paying attention to. Whereas bears, if you could see this 50 period start to flatten out and stop making progress upside as a potential support, that would be great. But we can do a whole lot better at all the remaining levels, which is really one thing. If we go out and zoom out here to the daily. The daily has the most eyeballs. It is always the most contextual. And dare I say, it is the most important simply because it's the most heavily watched. Now, the daily's not going to show after hours movement. That's okay. Okay, as far as the after hours are concerned, we currently sit right around 1100, so it doesn't make that much of a difference. Guys, bulls, first of all, I don't want to give up 11. I know we're basically right on top of the thing, but if we could hold $1,100, because understand that right now, and post split, these channels are very crucial. 1,000 to 1,100, huge obvious channel. 11 to 12, huge obvious channel. 12 to 13 could become a huge obvious channel. I don't want to give up a channel. It's less about the dollar amount and more about the psychological win that the bears would realize if that occurred, because those channels are so obvious. Everyone can look at the chart and see them. You can see them a mile away. They're that clearly there. So bulls, if we could hold 11 as a support, I would be thrilled. Honestly, if we have a flat day and we hold 11 and bounce a little bit maybe, great. If we could bounce hard out of the hole on high volume and head back toward 12, that's great too, right? That's even better. But honestly, just holding 11 is my primary goal, and the deeper we get into the channel to the upside, right, the better. Bears, big opportunity for you guys here tomorrow to really try to do your best to discourage as many very short-term bulls as you possibly could. That's what you want. You want to rain on their parade if you're a bear. How do you do that in the best way possible, at least with a day-to-day context? Break 11 hard to the downside, retest it, and reject again. Claim 11 as a resistance, whereas it's currently kind of acting as support. You want to flip that into a resistance and just shove it in the bulls' faces. Okay, whereas listen, bulls, tomorrow's an opportunity to shove it in the bears' faces by bouncing away from 11 and saying, no, we're not ready to give that up. We meant it when we broke this just a few days ago to the upside. All right, big day tomorrow, battle of 11. Now, implied volatility, especially important if you're trading options. Compared to the last week now, we are still, it's kind of weird. I'd say we're in like the mid to higher range, and it looks like we're high, but that's because we had a couple of days that were so downside, right? But, the last, including today, the last 3 trading days have kind of been in the same region. So mid to higher range compared to the last week. Compared to the last month, I would say we're about in the mid to lower range, since this big dip that makes it look more like the mid-range was only a few trading days. So we need to think about sample size of days spent in a range, right? So we actually are a bit lower than the majority of the last month. And compared to the last 3 months here, I would say we're in about the mid-range, okay? If not kind of lower when you start comparing context of how many days were spent, you know, at or below where we currently are. We're in the mid to lower range compared to the last 3 months. Obviously, this is important if you're trading options, guys, because it literally goes into how your contracts are priced, which means that you lose or make money based on how IV moves. So you want to set yourself up to capitalize on that, as well as, of course, being directionally correct. But as we know with options, and I hope you don't have to learn the hard way, being directionally correct or having a directional bias isn't always good enough. Now, the expected move for tomorrow, okay? Of course, weekly expirations, Thursdays, I should say, are quite luxurious because we have an expiration tomorrow. There is no educated guesswork. The market is giving us the data here today, the one time a week that this occurs. So tomorrow's expected move by tomorrow's close compared to today's close is plus or minus $28.89 a share. That is the one standard deviation expected volatility being priced in by the market. If you disagree with that, great. If you take that and couple it with an existing strong directional bias, if you have one, that could be a position for you, right? Disagreeing with the market is a good thing, including on the volatility bias that I'm laying out here with the expected move. And when it comes to options, you want to have a directional bias. You want to have a strong directional bias, but the position increases in quality if you also have a strong volatility bias, whether it's beneath what the market is pricing in terms of bias or well above. Now, you're probably thinking, okay, that's great. What about directional bias? Let's look at volume. 1.78 million total contracts traded today. Great sample size. Of those, 1.05 million were calls and 735,000 were puts. So that's a bit of a bullish bias here on the overall call put ratio here today. If we go one step further, break that down by time frame, the 0 to 20 delta range, the short-term speculators, 380,000 calls and 355,000 puts. Still a call side bias, guys, but that bias starts to fade a little bit when we go short-term speculators, right? But then, you start dipping down to the 21 to 40, basically the 21 delta all the way to 100 delta. All of that is leaning call heavy. And that's as you get more into like the midterm bets on average, the long-term bets on average, and the longer-term bets on average, all leaning bullish from today's data. Only the short-term speculators that are a bit more 50-50, but still leaning a bit to the call side. Guys, listen, hope to see you take advantage of one of the last opportunities we're going to have here to get grandfathered in at the current rate for our private community. In there every day, I'm sending out my personal scalp setup alerts, in-play stock alerts, human verified unusual options activity. That I've been tracking those for years. That's how I keep track of what the whales are up to. And you can also become a platinum one-on-one student if you prefer. You can join at that link in the pinned comment. That is the link that'll help you get grandfathered in at that current rate, so you'll be immune to price raises here in the near future. And you'll stay at that rate that you join at for as long as you retain the membership. So hope to see you inside. And hey, if you appreciate the free daily Nvidia content, please leave a like on the video and get out of here and enjoy your day. Best thing you can do for the channel, and I greatly appreciate it. I'll see you in the next one.